Hello, folks. Long time no see. Um, yeah, welcome to this week's Forex commentary. And like we used to do before, we discussing dollar index, foreign currencies, at least pick one. And yeah, we'll wrap up this whole video, right? So this is dollar index on monthly time frame. Okay, this is a monthly chart, dollar index, and from where we left off last month, I think we talked about dollar index drawing into this fair value gap here, and as soon as the markets got here, you'd expect some rejection, and I think we capitalize on those rejections and stuff like that. And not just that, we're looking at dollar index from the lens of the high time from institutional order flow, and that's what really skews everything because um, sometimes it's very exciting when you have data like the COT and other macro reports like the interest rates and stuff like that. But in real time, there is always a lag between how price action quickly conforms to data and how the markets quickly reforms around those fundamental reports and your quantitative analysis. Okay, and just like what I'm just saying now, it's what we're experiencing on dollar index because we've been bullish on dollar index for weeks, for months now. Okay, probably 2 months, because the dollar index has been somewhat bullish as soon as prices were completely rebalancing this inefficiency here, this gap, and we've been managing our expectation through and through, and that's one of the key things I'd like the person listening to note, because it's not necessarily about, okay, I know about COT and stuff like that. How do you manage your expectations in real time? How do you still get in setups even when markets are opposing fundamental views? You understand? So those are like key things you want to learn, because it's not just about, okay, I have, a secret weapon and stuff. And still, yet, you can't, manage expectations in real time, because, it gets very emotional when you are still trying so hard to fight what it is. Because, you know, if you look at, the weekly time frame, or even rather, even off of the monthly chart, when you're looking at DXY, and we all know about this consecutive of candle, which is the bearish of the block, right? And of course, we saw the market run through, of course, and exaggerate its way into this inversion fair value gap, and it's something we kind of like anticipated, right? Because it's the close of a weekly fair value gap, and those kinds of price action is normal, okay? Because we wanted to see prices essentially trade into to completely close this weekly gap, of course. And I was talking about some daily level this inside of this range, right? But notwithstanding, I didn't just want the market to completely rebalance this inefficiency. I wanted to see candlesticks close above, because when this happens, okay, this inverts this fair value gap, and once it inverts this gap, then this the likelihood of this swing point holding for support is very, very high, because once this gap is inverted per se, you understand, when markets return back here, markets could return maybe into the consequent equipment of the inverse fair value gap, or could just make an easy retest of the same, right, and offer more upside on it. But we didn't see that. We saw the gap. I made a post on Twitter talking about my views on Euro USD. That was last week Monday, and I said we're gonna have a long week. I wasn't in a joking mood. I wanted to just put something like pun intended. We're gonna have a long week. I mean, Euro USD is gonna be bullish, because we are having seen a rejection off of the monthly bearish on the block on dollar index, and the same monthly bullish on the block on Euro USD. But all of that being said, there's really nothing, happening this month, right? Which is so shocking because when you look at the seasonal tendency on dollar index and foreign currencies, you should expect more than what the market is actually giving. And regardless, we know that this is a different type environment because even those periods when dollar index was bullish, I don't think majority of the time period. It's not like we had President Trump in office, so I don't think the market, would experience such a charismatic person, someone who's only always willing to be in the media, to always be in the news, always taking action and stuff like that. So America currently is a bubble. Okay, it's a very fun place to be because a lot of stuff is really going on in the country, right? So because of all of those different market conditions, you can't just, you know, look at all of the facts and just get emotional about why markets are behaving the way markets are behaving because conditions are different. And that's why, a lot of times I'm like, um, you need experience with these things because markets can come in different ways. All right. Markets can just really come in different ways. And it's experience that takes you through, right? And one of my biggest saving grace last week was not even placing a trade at all. And I got lots of texts and saying, hey, where you at? And stuff like that. I'm like, I'm just watching movies, sleeping, eating and TikTok. Because really, um, there was a whole internal wrestle with even if I saw what Euro USD was going to do, there was this wrestle to want to put on risk because before I can put on risk on a trade, it doesn't matter if the trade is a winning trade or a losing trade. It has to come with some level of trust. I have to trust so much in that analysis to put on risk. Now, if I do not trust the analysis enough, or if I'm not confident in the analysis, it's always difficult to put on risk. Now, I'm very, very bullish on dollar index, owing for the fact that we traded below sell side here, we're on sell side liquidity here, trading into this fair value gap, and also this candles here we trade into this auto block. I think if you check the 3 months time frame, you're gonna see it more clearly, right? And you know, and we began to see, there was a daily shift in market structure, which already, which already validated the high time for institutional on the floor, right? So I wanted to see dollar index just rally more and more, right? And when I saw dollar index was willing to rally, I was already probably so locked in on a one-sided dollar index, and I didn't want to confirm. And I think I still have spillover of that emotion into this week. And what I'm going to do this week is probably trade gold only because gold is pretty much one-sided. I think if there's time, I'm going to try to cover gold and just show you what I'm looking at and what is my objective and what I'm looking at, what I'm looking at. You understand? Um, so yeah. So on the weekly time frame, obviously, DXY. Last week we sort of had a swing high. So obviously telltale sign that we're going to see more downside on dollar index, of course, and dollar index trade below previous weekly low, which already is like the primary sell side objective. But when you look at daily chart, there's this clean level I was looking at some weeks back. I think I shared it on Twitter when I was talking about this level being so clean, right? So as soon as we had a breakdown last week, I think yeah, Thursday, I was looking at this level here for shorts on dollar index, but I didn't take it because I'd already spent the majority of the week not doing anything and you know, I felt so comfortable not even doing that. So I decided not to take any trade on Friday, right? So this was my chart on Thursday, struck Friday, because I wanted to see dollar index just tank and into relatively equal low sell side here. So because I'm bullish on dollar index, okay, and that's the bias here. Okay, because I'm bullish on dollar index and we're running into some relatively quite low sell side, the weekly rejection block. So you can see the weekly rejection block. It's very difficult for me to want to do anything for now. Okay, I think it's going to take me like, you know, a few more things before I can probably make a decision and say, okay, does dollar index has or have the propensity to trade into sell side here? Does it have any interest in this low here? Because I know this low here is low resistance liquidity run. Okay, markets run into this low, mitigating this low, so it's low resistance liquidity run, and it's okay for the markets to actually just trade into sell side because this level here is clean. Okay, so when there was the run above here on Thursday stroke Friday into this level here, I just knew that okay, we're gonna see something here. I think um I think the downside of everything was I think markets expanding overnight. I think that really happened on Friday. I think that was what happened, and it was even more discouraging because if I'm going to trade a market that's expanding overnight, of course, I have to profile the market. I have to excuse the London session and engage in New York session and all of those kind of stuff. And, eventually I wasn't at home anymore. So I just forgot about trading on Friday, really. So it became very, very stressful because of the whole technicality around Friday's trading. Okay. Well, of course, um, it was good trading and good price delivery into sell side here. So this is objective on daily time frame, and I don't know what's going to happen here. I don't know if markets are going to revisit here because I'm bullish. Okay, now someone who's very bearish on dollar index, haven't seen this, right, is obviously going to be looking at the markets potentially trading into sell side here, which is very, very possible. Okay. Everyone sees the market based off of their own bias, right? And like I said, I'm bullish. And market made a quick run here. And this is a tourist soup. This could be and potentially a reaccumulation to discount. Okay. And because of that, that's why I'm very, very cautious. I'm not saying that I don't know if markets are going to trade here because and, um, I'm just what's the word? I'm trying to think of the word. Oh no, I don't know the word. It's not just about me being bullish on dollar index. Also, we already know that dollar index trying to sell side here, close the monthly gap. So this level here is sort of high risk, right? So a return into discount might be very, very sensitive, and owing to the fact that we ran some lows on the daily time frame, okay, that could mean something. But although when we look at Euro USD too, I think um, um, when I was looking at Euro USD during the weekend, all right, I have it here. We chopped off of these consecutive down candle. If when you see the monthly time frame, you'd see the consecutive down candle. So this is auto block or breaker, however you'd want to put it. But you see this month is indecisive. Okay, so that's one detail you want to note. Okay, regardless, this month is indecisive and high time for institutional order flow is bearish. So we haven't seen the markets run above or below any monthly range. So that's kind of like a suspect. This is currently for me, this is like a consolidation. Okay, it's a consolidation because we're inside the range of the previous monthly candle, and we still have a couple days for this month to close. And I don't know how this month is going to close, but this is last week of trading. I don't know how much Euro US is willing to expand this week. All right, so there's a lot of questions and there's a lot of low probability conditions because of there is something behind it from institutional order flow saying, and currently the markets are meeting objectives. Okay, not that markets aren't moving, please. It's the markets are meeting objectives. I mean, we I was talking about on Twitter. Last week how Euro USD is rejecting off of this weekly gap. Okay, while we're seeing downside of Euro USD and now seeing a high time frame retracement. Okay, you know, we spent weeks bearish on Euro USD, not because Euro USD was just because of high time institutional order flow, because we're actually seeing validation every single week on Euro USD. For every bearish weekly candle we saw on Euro USD, it gave us more validation that Euro USD is likely to still trade lower, right? And we spent about 4 weeks on that. And suddenly we had one very explosive week and to the upside. So it's very okay to, assume that okay, Euro US is bullish owing to the fact that really, previous structure hasn't, broken. Everything is still intact. Markets trading to support. Marketing closed this weekly fair value gap and stuff like that. So there was a lot of indication that Euro US was going to go higher, and how it was even difficult. The sales were so difficult. I think my only saving grace was because I executed off of the high time frame. And when markets seem to be very, very one sided, I added some extra positions, right? Aside that, very difficult price action. And, this one seemed rather easy, but obviously I did not participate, right? So we have the rejection block here on Euro USD. And I think so. Um, this is the rejection block on Euro USD, which is the drawn liquidity. But then, there is a consequent encroachment of the weekly rejection block. So I'm allowing for space because since I'm bearish in foreign currencies, right, and markets trading into a premium. Okay, for me, it's a redistribution to premium, all right, and markets are in the rejection block. I don't want to excuse the fact that markets could potentially trade into the consequent encroachment, but for the fact that markets trade into the weekly rejection block, I want to wait because we've traded above previous weekly high into the rejection block. And possibly they might trade here, but I don't concern myself with stuff like this, okay? I don't want to point out, okay, this is liquidity, this is liquidity, and stuff like that. No, since I have a reference point for a key level, and I have a margin for error. And so I'm just gonna wait to allow the market do what they're gonna do. Probably if today closes, today could even validate more upside on Euro USD, then I could, highlight the consequent equation as a drawn liquidity and probably participate. But going to this week, I already made up my mind that I want to spend my time on gold, and that's really what I want to do this week. Okay, and because it's a one-sided market, and since it's one-sided, all right, I know that you know it'll be a lot easier to make money if I'm present, okay, on the chart, and that's what I intend to do. Okay, so Euro usually completely closed the daily gap, and this was last week's close, and this was a daily time frame change in state in daily as soon as they close above this last down candle, this order block. Okay, and there was a retracement on Thursday and Friday, expansion and stuff like that. So it seemed very, straightforward. Okay, now if you look at the forward time frame, you can see all of this consecutive down candle and how markets were staying below these levels. Okay, so even while USD was here, I wasn't still favoring upside because I wanted to see more validation, not because USD isn't likely to go upside, go to the upside. It's just itself because I was so committed to one side of the market and seeing the market show me willingness to go in the other direction. I was willing to wait for all of the ingredients to form before I can participate. But of course, one of the downside was as soon as a market closed above, the market just ran overnight quickly. Okay, that's what the market did. The market ran overnight quickly. If I put this the session breaks and you look at it, you just look at as soon as the markets open on on Tuesday, markets just run quickly and stuff like that. So once this happens again, when markets runs higher like this in Asia and London session, because markets trading to an objective, which if you go to daily time frame, you're going to see a daily order block. Okay, so this is an objective. This is a bearish order block on the daily time frame, and markets trading into the order block. Now, someone might not put this into consideration. They might say, okay, markets are going to run buy side liquidity. But what about this order block, especially when you're day trading? Because if you're day trading and you're trading probably in London session and you want to capitalize on the move because you've seen validation of the daily bias through the expansion in Asia, you're going to take a loss because that's what market profiling was teaching. What's the average daily range? Okay, as the highest and premier objective. Okay, and stuff like that. You answer all of those questions, and markets just the following they just return back into key level. What's the key level? That level that affirmed the change in the state in delivery, right? And market started up a new buy program again into Friday. And of course, if I put the session breaks, we saw markets rally overnight again. And really, I haven't been very apathetic about price action um, in the previous week. I wasn't executing here again. I would have normally just, oh, this is fresh meat. This overlapping a 4 hour bullish on block, and my stops would just be here basically because this makes this auto block here high probability, right? And I would have got a very easy way. But like I said, I was apathetic last week and I just allowed markets to this thing. And in the following morning, yeah, I think I had this one here because we saw consolidation um, in in the London session. Okay, this consolidation in London session, and wanted to see the markets return here, and markets in fact did after running buy side liquidity here. That's previous day's high, and still offered more buy side. And this is a good trade. Buying below sells are here and buying after the change dating delivery in 30 minutes time frame. So this is beautiful, beautiful trade. More like a trade review for someone who wants to study it. Okay. Let's have this here. This is a 30 minutes fair value gap. All right. So that's a 30 minutes fair value gap. And this is a change in the statement delivery here for folks asking and wanting to know how to use this tool. All right. And all right, I have to for me. All right. So this is the far fair value gap, and let it show on the minutes time frame, and you want to see what it looks like across board. You can see this gap here. You can see the change state in delivery here. Okay, but now we have this candle here, this breaker, this mitigation block overlapping this fair value gap. So this up, up candle takes precedence over this down candle. So because of that, you want to reference the fair value gap first. Okay, not the body of the candle, but the fair value gap first. All right, it takes priority. And on the 60 minutes chart, um, you can see the markets running you know, sell side here. And if you go to the technical time frame, you can execute here, put your entry here, you can put stops below here. And when that begins to progress, obviously, that's when you want to lock in on, very high risk to reward type setup. And that's how to really do it. Okay. Because if market offers you high risk trade or high probability but high risk in terms of pick range, and for me personally, I don't think high risk stems from pick range. I think high risk really stems from condition and stuff like that. Okay, and from self too. If you have a conflict with buys and you're trying to trade, forcefully put on a trade, that's more like a high risk trade compared to a market that is predisposed to go in one direction, regardless of the stop loss. I don't think that's high risk setup. I don't think high risk is about what's the stop loss, because you can't define, you can't use what you're comfortable with to define a market that's high risk or not. Okay, I think that's not consistent, right? The market determines your stop loss, obviously. Okay, and when you can see this inversion here, when market closed above this fair value gap here, inverting this gap, making this low, um, high probability, high risk. Okay, we're looking at a total soup, a reaccumulation to discount. Okay, and another change in state in delivery. Obviously, no shift in market structure yet until the market trades through here. And that's one of the beauty of having other toolbox or things you can use to read price action. You don't always need a market structure shift to validate market structure, or if markets are predisposed to go in a certain direction. You don't always need it, right? So we have these two candles here, auto block, inversion, fair value gap, market returning. As soon as the market inverted this gap, market returned to this key level that validated the change state in delivery. Okay. And also market came to make a retest. So potentially Euro USD on Friday was, I think that's the best I've seen in a while, because we're seeing a total soup here offering setup off of the high time frame, and we're seeing another setup from here on this auto block, and we're seeing another setup from here on this proportion block. So that's three setups. And I think if I traded on Friday, mind you, on the intraday time frame, I'm not talking about 4 hour time frame now, on the intraday chart, I would probably have outperformed everyone else that who forced in trades in the week, especially those without buys, because I got a lot of messages on Twitter last week, and everyone was just trying to forcefully sell euro, sell it. You cannot do that. Okay, it's always easier to make money when the daily candle or the weekly candle, aligns basically. All right, or if the daily candle is likely to drop into a particular price target. So this is gold. I think I've done a lot of recap already on um, Euro USD, because it's more like a recap this week rather than a commentary, because markets are trading. Markets are just meeting objective off of last week's analysis, when I said markets were trading off of the monthly um, auto block and stuff, right? So gold, we're trading to previous monthly high, an immediate rebalance. It's always a very powerful tool. Yeah, when markets trade into the previous or a previous candle's high or low, regardless, that's an immediate rebalance. Okay, markets aren't essentially leaving any space for inefficiency. And I think I've talked about it a couple times. Sorry, especially on gold, right? Um, this monthly candle, we talked about the immediate rebalance here, and the same thing is happening this month. So, so we saw that on gold monthly time frame, and you can see what it looks like on a weekly time frame. So you see, sometimes you don't need to go to a lower time frame to get, quote and unquote, a refined entry. Sometimes it's just off of the high time frames, really. Just pick a level if you really know how to pick levels, and that's really all you need. And you don't need to refine. Once you have this and you go to the 4 hour time frame and you see something that overlaps this, then that's very high probability, really. But that's a conversation for another time, really. So now we have a weekly time frame, we have an order block, a bullish order block, and everyone knows this market is predisposed to go higher, essentially. And also, I have, we have this. I think it's from this low to this high. All right. So I took the extension from this low to this high. markets began the retracement here, and the retracement sort of like ended here. So I took the extension from this low to this high and projected one standard deviation. So that's about 3880, around 3880. So that's like my projection for gold. And we have the weekly order block, of course, and we also have the daily order block and institutional order flow entry drill. Here we have institutional order flow entry drill. Market responded from this premium level and institutional order flow entry drill. So this level is high resistance. Okay, we're likely to see the market utilize this down candle for support, right? And now, thing is, I think today is bank holiday, and I don't know. I'll have to be careful because um aside fact that it's bank holiday, today is Monday, and at least I'm going to avoid London session. I would accept whatever comes with not trading London session because I have levels I'm going to show you that I'm looking out for because markets are currently even rejecting off of the level, right? This is the daily order block and stuff like that, and you know just going to see what happens really. I'm just going to see what happens really. And on the forward time frame, um, if by chance we see the markets return a little bit into discount because this is gold. Okay, if it's forex, very comfortable with this up candle. I'll take a buy. But today is Monday, and I just want to see how you know the overnight session and the London session plays out. And if markets validates more long than New York, I'm going to go in. All right, I'm going to go in, and obviously I will start scaling out at this high here, this high here, and I'm going to allow the rest to run for this target here. So basically that. So just going to see how London and plays out because today's Monday and bank holiday too. So it's not something enthusiastic about. All right, so we have this consecutive down close candle, the other block on gold. So I'm going to see how prices clear around here and you know see if they have any interest for this gap. And ideally, I don't expect them to trade into this gap, but this is gold. Let me just leave this open, and because of today's bank holiday, I'm just leaving everything open. Okay, so I want to see. I'm going to see what happens, but obviously, I'm going to look for entries on gold. Probably if I see more entries during the week, or I don't know how gold is really going to play out. Um, Maybe gold returns into sell side here. I don't know. So I'm going to wait to see how London session plays. But from the daily time frame, we already have the daily order block. All right, we have even the file change state and delivery, everything aligns, and this low we've run sell side here already. So making this level a high rate. So even if worst case scenario gold runs, probably I take a trade and gold runs sell side here. Then if run below this low, it's still going to be a Taurus shot because we're very one-sided on the weekly time frame and the daily time frame, and currently the 4 hour time frame is indicating more upside. So there's actually nothing wrong even taking a loss on this kind of trade. This is the kind of loss I'd prefer to trade. This is a good loss if I take any loss on gold because I'm going to re-enter, and it's even better because I'm going to be trading off of a market structure shift off of lower time frame after a Taurus shot, and the risk to reward is going to be insane. It's going to be insane for the fact that we have multi time frame aligned for gold. So that's how I always think, and that's why I don't always risk so much. I risk between 1 to 3% on trades, and once that fails, I can always re-engage the market and make my money back and even more because I think projection will be about 5 to 8 hour on this trade. But when that happens, if I take a loss on gold, I'm going to be saying that maybe like 15 hour ish. So that's going to be insane. So um, I'm just going to spend a lot of time on gold this week so I don't miss out on trades because when gold begins to move, it's always difficult to take in trades because barely see any retracement. So if you're lucky enough to find good retracing, I think um, you should not put your emotions and just take in the trade. So, so I hope you found this one insightful. Seeing dollar index euro all meeting objectives, really nothing um, I want to be doing rather than waiting, considering everything, how markets been playing out, right? So, if anything changes, if anything develops, and definitely you'll hear from me. In the meantime, be safe.